Welcome to Investing Insights. I'm your host, Ivana Hampton. Investing Insights is helping investors navigate market volatility. Morningstar strategists and authors will deliver timely insights, trends, and tips. These episodes will regularly pop into your podcast feed. Investors are piling into global gold ETFs for a safe haven from uncertainty. Demand surged in the first half of 2025, according to a new report from the World Gold Council. The industry trade group points to geopolitical turmoil, global trade policies, and higher gold prices for driving interest in these ETFs. The lure of investing in gold ETFs can vary from wanting to diversify a portfolio, hedge against inflation risk, or simply bet on rising prices. Bryan Armour is here to explain what you should know about this speculative asset. He's the Director of ETF and Passive Strategies Research for North America at Morningstar Research Services. Good to see you, Bryan.
Thanks for having me.
Well, let's start off with our intro question. What are gold ETFs? How many types are there, and how do they work?
Yeah, so there's a couple different types, the most common of which are physically backed gold ETFs. So those would be trusts that actually hold gold. And then those obviously would move in price directly with the price of gold. And then there's gold miner ETFs, which are companies that mine gold and produce gold themselves. And so those tend to be more like leverage plays, but they're actual underlying companies. There's other dynamics there than just purely the price of gold.
Now, the World Gold Council says that there was strong demand for global gold ETFs in the first half of 2025. How much money flowed into and out of these ETFs, and what's your take?
Yeah, from our data, I saw about $26 billion flowed into gold ETFs. I think it's been a few years since we've seen big inflows into gold. But overall, it's the geopolitical risk, the economic uncertainty with tariffs that are changing and uncertain how they'll impact the economy and individuals. It leads investors to a risk-off situation where they're like, how do I hedge against some of these risks to stocks, to my own portfolio, to the dollar? And gold is, a classic safe haven asset for that.
How have gold ETFs held up against the market volatility this year, and how does that compare to other periods of uncertainty?
Yeah, so gold is uncorrelated to stocks and bonds. And so what that means is sometimes it works really well, and sometimes it drops the same amount as stocks and bonds. And uncorrelated does not mean negatively correlated. So this year was a good year to own gold. I think it's up about 25% over the first half, while stocks are up 8%. But in the throes of April, at one point stocks were down 15% and gold was up 15%. So it worked as a diversifier as intended this year, but there are also times where it won't.
Let's talk about your recent article about how to choose the right ETF. You pointed out that a 2-month launch difference helped create a big gap between the two largest gold ETFs. Can you talk about the rivalry between SPDR Gold Shares and iShares Gold Trust?
Yeah, definitely. So the SPDR ETF is GLD. That was the first to market in late 2004. iShares launchers in early 2005. But GLD was the fastest ETF to $1 billion in net assets. There's a lot of excitement about the first gold ETF. And it was very similar to the first Bitcoin ETFs that launched early last year. In that, investors thought it was a sham that they didn't actually hold the gold, and what are investors actually getting? And so the people involved in creating this product actually took a picture in the gold vault in London, sitting on a stack of gold bars to prove that this is the gold that's in GLD. So kind of an interesting parallel history with Bitcoin. But anyway, so since then, that first mover advantage has accelerated to GLD having over $1 billion or $100 billion in net assets versus iShares, which is closer to about 50 billion.
So being first, you're up $50 billion.
Right. Both were very successful, though. I will say that.
Well, you have listed those two ETFs and several others as top ETFs or top gold ETFs in your article. What makes those ETFs or any on that list different from each other?
Yeah. So holding gold for physically backed gold ETFs, holding gold is the same regardless of what ETF you choose. So the two differences are going to be the fees that you pay and then also the trading costs you incur when you buy or sell an ETF.
So is that what investors should zoom in on when they're considering a ETF of any kind?
Yeah, of any kind, but for these in particular, because they hold exactly the same thing. But in general, low fee and liquid ETFs are going to have the lowest costs for investors for sure.
How do the trading costs affect buy and hold investors and day traders? Because it has to be different, right?
Yeah. So when you hold for a long period of time, you're not trading. So if you buy and hold for years or a long period of time, you're not trading in and out. The trading costs don't matter as much to the total cost of owning the ETF. If you look at a day trader or a proprietary trader, a market maker, they're trading in and out a lot. Multiple times a day. They have large orders that could potentially move markets, so they need more liquidity. And so going into the biggest ETFs is actually a way to reduce your costs, and the fee is less important. But for buy and hold investors, I would focus on the fee.
Got it. So the IRS applies a different tax treatment to gold compared to stocks and bonds. What should investors know?
Yeah, so gold is considered a collectible. And so the long-term capital gains tax rate, the maximum is 28% versus 20% for, your typical stocks and bonds. So, if you hold over a year, 8% higher in tax rate.
What are the best gold ETFs and why? I know people have been waiting for this.
Yeah. So it depends, once again, on what your use case is, if you're a day trader or if you're a buy and hold investor. But I would say GLDM and IAUM are the two best options for buy and hold investors. And if you really need significant liquidity, then GLD and IAU are great options.
So that's a total of 4, but 2 for buy and hold and 2 for day traders.
Yes, exactly.
All right, so let's quickly pivot to another speculative asset that you brought up earlier. People sometimes refer to Bitcoin as digital gold. One, is that a fair comparison? And 2, how has Bitcoin performed this year?
Bitcoin has actually performed very similar to gold this year overall. Very different paths, but overall similar performance through the first half of up 25%, I believe, for Bitcoin and up 10%, 12% for Ethereum. But yeah, so digital gold, I guess Bitcoin and cryptocurrencies in general have been compared to various different investments. They've been talked about as an inflation hedge. They've been talked about as the best comparison being art. Digital gold is obviously a classic one. In some ways, it's a diversifier because most of the time it's uncorrelated to stocks and bonds, and the individual market with like a speculative asset is really just going to run on its own because it's not tied to fundamentals the same way that stocks and bonds are. But what we found is that Bitcoin, and cryptocurrencies in general, but Bitcoin also is when stocks fall, when we enter into bear market or stock market falters, cryptocurrencies are often down even more. And so in terms of uncorrelated most of the time, yes, but as a hedge against those market downturns, cryptocurrency has not earned the title of digital gold for me.
Got it. So you kind of touched on it for a second. Would you say that gold ETFs or Bitcoin has served as the better hedge?
I would say gold. I would say gold is definitely the better hedge, but that doesn't mean it'll outperform in the next year, 5 year, 10 years. I have no idea.
Because it all depends.
It all depends, yeah.
Well, Bryan, thank you for coming to the table and discussing what we need to know about these speculative assets.
Of course, anytime.
That wraps up this week's episode. Before we sign off, we have a correction to make concerning the July 18th episode. This dividend investing strategy deserves a second look. A response about which dividends are taxable versus non-taxable should have said, quote, if you're in a bond fund, most dividends would be taxable unless you're investing in treasury bonds, which would normally be exempt from state and local taxes, end quote. We incorrectly said federal taxes. Thank you for making this show part of your day. I'm also thanking senior video producer Jake Van Kersen and associate multimedia editor Jessica Bevel. I'm Ivana Hampton, lead multimedia editor, Morningstar. Take care.